Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. And today we're looking at Real Asset Acquisition Corp, or RAAQU. Let's just say things are getting interesting and someone might be buying or selling. We've got a brand. New report from RAAQU that dropped on the 27th of February 2026. It is what they call a Form 8, basically a heads up that something important is happening. Think of it as a corporate breaking news alert. So what is the big news? RAAQU is getting together with a company called IQM Finland Oy. This is a business combination agreement, meaning they're planning to merge. The goal is to make IQM, which is currently not a public company, into one that is. This is a pretty standard move for companies like RAAQU, which are often called SPACs or special purpose acquisition companies. They go public first to raise money, and then they look for a private company to buy and take public with them. You might recognize the names of the shares and warrants involved here. RAAQU has units, Class A ordinary shares and redeemable warrants, all traded on the Nasdaq. This report tells us about the securities that are already registered and traded, giving us a glimpse into the structure of RAAQU itself. The main point of this filing is to announce that on the 27th of February 2026, RAAQU and IQM released a joint press release. This wasn't just any press release though, it was to announce they'd be holding a conference call to discuss this big merger. They even attached the press release and a transcript of the conference call as exhibits to this report. They're basically saying, hey, we talked about this deal, here are the details. Now, this agreement was actually signed a few days before this report. On the 22nd of February 2026, it details the plan for RAAQU and IQM to combine. This is where IQM will officially become a public company. It involves IQM Finland Oy, an IQM subsidiary in the US, and another subsidiary in Luxembourg. It all sounds very corporate, but the main takeaway is that a merger is planned. This part tells us about the paperwork. IQM plans to file a big document with the SEC called a registration statement. Think of it as a detailed business plan for investors. This document will include a proxy statement for RAAQU shareholders, which is basically information they need to vote on the merger, and a prospectus for IQM, which is like its introduction to the public market. Once the SEC gives the okay, RAAQU will send out the official voting information to its shareholders for a special meeting. Here, they're telling us who might be involved in asking RAAQU shareholders to vote for this deal. It is pretty standard language, essentially saying that the company's directors and officers could be considered part of the group encouraging a yes vote. They also point you to other filings where you can find more information about these key people. This is a really important section in any of these filings. It is a disclaimer. They're telling you that much of what they discuss, especially about the future, is based on hopes and educated guesses. Words like estimate, plan, project, forecast, intend, and expect are all red flags that these are not guaranteed outcomes. They're talking about market opportunities, customer growth, new product development, and of course, the success of this merger. This sentence perfectly sums up the forward-looking statements section. They admit these are based on assumptions that are inherently uncertain. So when you hear them talk about future success or growth, remember they're saying it is not a sure thing. And here is the real kicker of the forward-looking statements. They are exposed to risks, both known and unknown. These risks could make the actual results of the company after the merger very different from what they are predicting. It is like saying, we think it'll rain tomorrow, but there is a chance it could be a hurricane or a heat wave. This is a laundry list of all the things they are predicting. From market share and customer growth to new technologies and the deal itself, they're painting a picture of a bright future. They're particularly excited about IQM's role in quantum ecosystems, which sounds like a very high-tech area. They also mention the stock exchanges where IQM shares are expected to trade, and how much money they expect to bring in from RAAQU's trust account and shareholder redemptions. This is critical because redemptions by RAAQU shareholders can significantly reduce the cash available for the combined company, impacting its ability to execute its plans. This is where the reality check comes in. They list quite a few risks. IQM is working with emerging technology, which is super cool, but also comes with huge technical hurdles and no guarantee of success or market acceptance. They've had historical losses and haven't been around that long. They'll need more money down the line. They rely heavily on a few key people and big government contracts. And of course, there is the risk that the deal itself might not go through, or that RAAQU shareholders might redeem their shares, leaving the new company with less cash than planned. That redemption part is key. If too many RAAQU shareholders decide to cash out, the combined company might not have enough money to actually do what it plans to do. Finally, this section is a legal disclaimer. They're making it very clear that this report is not an offer to sell or buy any stock. It is not a sales pitch. They're just providing information. They also emphasize that no regulatory body has approved or endorsed this offering, and anyone claiming otherwise is committing a crime. This is boilerplate language, but it is important for ensuring they're not making any illegal solicitations. Now, looking at this whole picture, it seems RAAQU is about to bring a cutting-edge quantum technology company, IQM, into the public market. The excitement is high, with projections about market growth and technological advancements. However, the risks are equally significant. Emerging tech is a double-edged sword. It can bring massive rewards, but it comes with huge uncertainty. The biggest immediate hurdle appears to be managing shareholder redemptions from RAAQU. A large number of redemptions could seriously cripple IQM's ability to fund its ambitious growth plans. We need to watch how many shareholders decide to cash out. If they can navigate these risks and execute their strategy, IQM could be a game changer. But it is a big if. Alright, that is our breakdown of Real Asset Acquisition Corp. Its latest filing, what is your take on these numbers and what they signal for the company's future? Do you think this merger with IQM will be a success, or are the risks too great? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.